Well, there's nothing about Brexit that's simple, but in terms of the benefits, it's clear that a large amount of the business in the City of London is linked to EU membership. Hi, I'm Professor Karl Whelan of University College Dublin, and I'll be talking about the impact of Brexit on the UK financial sector. I think there's a temptation regarding the UK's financial services sector to look at all the regulations that come from Europe and say the UK could leave and it could have much less red tape and the financial sector could prosper. I think in all likelihood the UK after Brexit is going to have the same type of European regulations that we currently have, but the UK will have much less of a voice in determining those regulations. One template that's useful for thinking about financial services after British exit is Switzerland. So the Swiss have access to the EU markets. However, 2 points you could make about that. One is that they have largely done so from headquarters in London because London is in the EU. So those kinds of businesses may move to Frankfurt or Paris or somewhere else. And the second point is the relationship between the EU and the Swiss is becoming more complicated. Increasingly what's happening is that the Swiss have to basically transcribe European financial regulations into their own law. So if that's the future for the UK, it's a future in which the UK will have to accept European financial regulations and won't have a voice in determining those regulations. And the absence of that voice could influence the outcome of things. Remember that there are very influential political voices within Europe that like to engage in dark mutterings about Anglo-Saxon finance and so on. It would certainly be a lot of uncertainty for a number of years without, I think, improving access for UK financial institutions anywhere. I think the Vote Leave advocates will potentially talk about gains from trade agreements and services with the US, with India, with China. However, already the US has indicated that it's not particularly interested in pursuing such trade deals with the UK. And the kinds of deals that you could do as part of a much larger market inside the EU, you tend to get much better deals than I think the UK on its own is going to get. In the meantime, the UK has a series of preferential trade arrangements with a lot of countries around the world in its role as part of the EU, and they will all be gone and have to be renegotiated. So it's unclear that there are greater opportunities for UK firms under a Brexit scenario. I think one of the complications in this debate is that people who advocate voting to stay in the EU know what the EU is, and nobody thinks it's perfect, and we can all point to the things that we don't like. Whereas those who vote to leave the EU can make claims that all sorts of potential problems will be negotiated away, but we just don't know whether they will be or not. I think a key takeaway for people thinking about voting on the economic effect of Brexit and what effect it has on your pay packet is to recognise that the City of London is an enormous financial contributor to the UK economy, and the vast majority of senior figures in the city want to stay in the EU and believe it's good for them. The negative effects on the London economy specifically could be considerable, but London is sufficiently important for the UK as a whole that this is something that could have much wider impact on the UK economy as a whole.